This is probably why all that people in the market want to talk about lately is who will be the next Fed chair. Since the Fed chair holds only one vote, like the other 11 FOMC members, the economics of the Trump economy will ultimately matter more than whether the chair is a dove or a hawk. I don't think the July labor market data are as decisive for the outlook for US monetary policy as many on Wall Street seem to think they are. To me, the most important takeaway from the July job report is that the downward revisions of the May and June employment estimates have brought them closer in line with the initial jobless claims that had surged in June. Non-farm payrolls and jobless claims are not always highly correlated. However, since the start of 2024, the two series have had a high negative correlation of 50%. The fact that weekly initial claims have fallen back below 230,000 is consistent with the hypothesis that as the uncertainty around Trump's trade war eases, companies have gone back to hiring again. I tend to also agree with Jerome Powell that it is too early to know to what extent the slowdown in employment growth is due to the drop in illegal immigration and increase in deportation. It makes a very big difference whether the slowdown in hiring compared to last year is the result of a negative supply shock or of a negative demand shock.